So today I'm planning to do some problems regarding consolidated statements, that is consolidated SOFP. This is the most examined question in FR. Okay, there are high, like almost 90% chances that consolidated statement of financial position will be tested. Okay, so I want you guys to be 100% clear with the concept. See, so far what I've taught is clear for you guys, right? See, we have taken the basics of consolidation yesterday. Is it clear for you guys? Everyone, those who attended yesterday's class, is it clear? It's clear, right? You understood how to calculate the fair value of consideration and all, right? The value of investment, the fair value of consideration, etc. Deferred consideration, types of consideration, deferred consideration, contingent consideration. You guys are clear with it, right? So today, I'll give you a question regarding finding out the cost of investment. Okay. So guys, I'll share my screen. Just wait a minute. I hope you guys can see the question. Is it visible, guys? Is this visible? Okay, okay. So I want you guys to tell me what will be the how will we tackle this question. They're asking us the cost of investment. See, yesterday what we learned? We learned how to find the value of investment, right? We learned how to find the value of investment, right? Yeah. Similarly, I want you guys I want you guys to find the cost of investment in this case, in this question. From this question, first of all, tell me what all considerations are being given in this question, in this scenario. What all, read the question first and tell me what all considerations are given in this scenario. We learned different types of considerations yesterday. And I want you guys to tell me what all considerations is being given in this question. Okay, okay. It's share exchange. That is share consideration and deferred consideration. Why is it a deferred consideration but not a contingent consideration? Tell me. Why is it a deferred consideration but not a contingent consideration? Why? Why is it a deferred consideration instead of a contingent consideration? Why is it like that? Exactly. There is no condition, right? A contingent consideration is a consideration that will be payable based on certain conditions. Here, is there any condition? Here, is there any condition? Is there any condition? No, right? So, it is what? It is a deferred consideration. So, what is our first requirement? Calculate the cost of investment and show the journals to record it in Jack's financial statements. Okay. In Jack's financial statements. So, can you guys do it on your own or do you want me to work it out? Will you do it by yourself? If you want, I'll work it out. Tell me. What do you guys want? Do you want me to work it out? Do you want me to work it out? Give me a response, guys. Do you want me to work it out? Guys, are you working this out or do you want me to work it out? Tell me. What is 40,000? What is 40,000? What is 40,000? Total consideration. Is it 40,000? Okay, I'll do it. Okay, wait. I'll do it. I'll do it. Don't worry. I'll do it. Just a minute. Can you guys see my Excel sheet? Can you see the spreadsheet? Can you guys see the spreadsheet? Okay, okay, fine, 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 fine. Okay. So, so we have, first of all, what we have to find? We have to find what? What are they asking us to find? What are they asking us to find? What are they asking us to find? Tell me. What are they asking us to find? Cost of investment. See, from yesterday's class, we have learned that cost of investment is same as what? Fair value of consideration, right? Cost of investment is what? Cost of investment is what? Cost of investment is fair value of consideration. Is that clear? We have learned it yesterday, right? Okay, okay, okay. So first of all, what we have to find? We have to find fair value of consideration or cost of investment. Let's say cost of investment. So tell me. So in order to find the fair cost of investment, we have to find what? Fair value of consideration. So what is the fair value of purchase consideration here? What is the fair value of purchase consideration? What all are the consideration that we are giving? Tell me. What all are the considerations that we are giving? One is share consideration, right? Share consideration. What is the other one? What is the other one? There are two types of considerations, in which one is share consideration and the other one is deferred consideration. Deferred consideration. Okay. So coming on to share consideration, tell me how many shares are we acquiring? How many shares of Becky are we acquiring? Tell me how many shares? How many shares of Becky are we acquiring? That is 24 million, right? 24 million. We are acquiring how much shares? 24 million. So equal to 24. Okay. Just wait. I'll just give you. Okay. We are acquiring 24 million shares of Becky. So tell me, for that, what are we giving them? What are we giving them? What are we giving them? Yeah, it's 2 by 3. It's correct only. Yeah, yeah. For 24 million shares, we are giving two shares for what? Two shares for every three shares acquired. So how much will this be equal to? How much will this be equal to? What will be the share consideration? What will be the share consideration? 24 into 2 by 3. Is it enough? Is it enough? We have to multiply it with what? Multiply it with what? What is the share price? What is the share price of Jack? What is the share price of Jack company? How much is it? See, you can see here. Jack's shares have a nominal value of $1 and a current market value of $2. So what is the value of the shares? It is 2. So what is the share consideration? What is the share consideration? It's 32 million, right? It's 32 million. Is this clear, guys? Is this clear? Is this clear? Okay, fine, fine. Now, what about next? What about next thing? What is the next consideration? It is a deferred consideration, right? It's a deferred consideration. So, in a deferred consideration, when are we paying this consideration? When are we paying this consideration? Tell me. When are we paying this consideration? We are paying it after 3 years, right? We are paying it after 3 years. Got it. We are paying it after 3 years. So, will we include the value as it is? See, what we have to do here? What we have to do here in this scenario? Yeah. What should we do? We should convert it into present value, right? We should convert it into present value. How do we convert it? What is the deferred consideration here? Tell me. What is the deferred consideration here? What will be the deferred consideration? Do you guys have any idea? Okay, okay, fine. How much is the deferred consideration here? Some are telling it's 24. Okay, fine. Just wait. So, two shares for every three shares acquired in Becky and a cash payment of $1 per share payable 3 years later. So, tell me, what is the cash consideration that we are providing for one share? What is the share consideration that we are paying for one share? What is the consideration that we are paying for one share? It's one, right? It's $1. You guys get it? It's $1 into. It's $1 into how many shares have we acquired? How many shares of Becky have we acquired? 24 million shares, right? We have acquired 24 million shares. What is this? This is the cash consideration that we will be paying after 3 years. So what should we do? We have to convert it into present value. Have they given the discounting factor here? Have they given the discounting factor? How much is the discounting factor? It is 0.75. Yeah. So what is the deferred consideration? What is the deferred consideration? 18 million, right? So tell me, what is the fair value of purchase consideration? Fair value of consideration. What is the fair value of consideration? It is the sum of all the consideration, that is 50 million. Is this clear, guys? Did you guys get it? Is it clear for everyone? Is it clear for everyone? Any doubts? Any doubts? Any minute doubts you can ask me. Any doubts? Any doubts? Okay, fine. I hope this is clear. So we have calculated what? So what is this fair value of consideration? What is this fair value of consideration? It is nothing but the cost of investment. Got it. It is nothing but the cost of investment. So what was our first requirement? Calculate the cost of investment. Right. So we have found out the cost of investment. Now tell me, they are asking us the journal entry in respect of Jack's financial statements, Jack's individual statements. They are asking us what? Journal entry. I've taught you this yesterday. Journal entry. How do we, how do we, how do we show this as a journal entry? Tell me. What everyone's response. How do we show this as a journal entry? How do we show this in a journal entry? Tell me. Tell me. I want everyone's response. See, I've taught you this in detail yesterday. In very much detail. Tell me. Debit what? Debit investment in subsidiary. Investment in subsidiary. What will be the value? What will be the value of investment? What will be the value? 50. We are receiving this investment as a result of what? We are receiving this investment in subsidiary as a result of what? Are we receiving this for free? Are we receiving this for free? Are we receiving this for free? Yeah. What did we give? What did we give? What did we give to Becky's shareholders? What did we give them? What did we give them as in order to receive this investment? What did we give them? We gave them share consideration and a deferred consideration. I told you, whenever, whenever, whenever a company gives or issues shares, there will be two entries in the credit side. What are they? What are they? What are they? Tell me. What are they? Exactly. That is credit share capital and credit what? Share premium. Have they given us the share capital component and share premium component of this? Have they given us share capital component and share premium component in this scenario? Have they given us the share capital component? So you can tell me. Tell me. Have they given us the value of share capital here? How do we calculate share capital? How do we calculate? Yeah, how do we calculate share capital? Basis of what value? On the basis of which value will we calculate share capital? On basis of which value? Which value? Exactly, nominal value. So I want you guys to tell me how many shares have we given them? See, in order to find the share capital, we have to know how much shares have we issued in respect of this transaction, right? How much shares did we issue to Becky? How much shares did we issue to Becky? Tell me. Yeah, it is 16 million. How did we get this 16 million? See, 24 million shares acquired. For every three shares, we issued how much shares? For every 3 years, for every three shares of Becky company, we issued two shares. So how much is the shares? 16 million shares. So We issued how much shares? We issued how much shares? We issued 16 million shares. We issued 16 million shares. So how do we calculate share capital? How do we calculate share capital? Tell me. How do we calculate share capital? How do we calculate share capital? Tell me, guys. How will we calculate share capital? Yeah, exactly. It is 16 million. That is 16 million shares issued into nominal value. Tell me, what is the nominal value here? What is the nominal value? What is the nominal value of JAG company's shares? It is 1. So what is the nominal value? 1. So how much is the shares that we have issued? It's 16 million. So what is the share capital? It is 16 million. Got it. Now tell me, what will be the share premium here? What will be the share premium? What will be the share? See, I want everyone's response. What will be the share premium? See, it will be 16 itself. How? How do we calculate share premium? See, share premium, share premium per share is equal to market value minus nominal value. What is market value minus nominal value of JAG company shares? What is market value minus? What is market value minus nominal value? What is market value minus nominal value of J company's shares? Tell me. What is the market value minus nominal value? It's 1, right? What is the market value? The market value is 2. Market value is 2. What is the nominal value? 1. So what is remaining? 2 minus 1. 1. So what will be the share premium? What will be the share premium? 16 million shares issued into 1. Is it clear? Is this clear so far, guys? Okay, fine. So, is that it? Is there anything else? Did we only give them share consideration? Did we only give them share consideration? So, what? See, have we paid this deferred consideration yet? Did we pay? No, we are yet to pay. So, what is it? So, what is it? Liability. What liability? It's a deferred liability, right? It is a deferred liability. So, what happens if liability increases? Will we debit or credit? Will we debit or credit? We will credit. So what will be on the credit side? Deferred liability. What is it? How much is it? How much is the deferred liability? 80. Did you guys get this? Is it clear? Is it clear, guys? Is this journal entry clear? See, I've taught you this yesterday, right? It's the same exact thing, right? Is it clear? Okay. So what is the second requirement here? What is the second requirement? What is the second requirement? Show how the discount would be unwound. I've taught you this yesterday. I've taught you this yesterday. See, what is this deferred liability here? What is this 18 million? Is it the closing amount or is it the opening amount? Is it the closing amount or is it the opening amount? It's the opening amount, right? It's the opening amount. So tell me, will we show opening or closing in the FS statements? Will we show opening or closing in the FS statements? We will show what? We will show the closing amount, right? So what is the opening deferred liability? Opening deferred liability. Tell me. What is the opening deferred liability? Tell me. 80 million. How to convert this into? How to convert this into closing? How to convert this into closing? Tell me. How to convert this into closing? How to convert this into closing? Exactly. That is, we have to unwound the discounting factor. So, what is the interest here? Or what is the interest? Unwound. Unwound what? Discounting factor. What is it? How much percentage? How much percentage is it? 10 percentage. 10 percentage of 18 million. That is into 0.10. So what will be the closing liability? What will be the closing liability? Closing deferred liability. How much will be the closing deferred liability? It will be 18 plus 1.8. What will it be? It will be 19.8 million. Is this clear, guys? Is this clear? So they're asking me how the discount would be. So now tell me, what will be the journal entry for this finance cost? Journal entry, journal entry, journal entry for finance cost. Tell me. See, just think. What is happening as a result of incurring this finance cost? What is this finance cost for us? What is this finance cost for us? What is this finance cost for us? Debit finance cost, credit deferred liability. Exactly. It is an expense, right? Finance cost is an expense for us. So what will we do with an expense? We will debit or credit expense. Will we debit or credit expense? We will debit the expense, right? So debit what? Finance cost. How much is it? How much is the finance cost? It is 1.8 million. So what will see as a result of incurring this finance cost? What is happening? What is happening as a result of incurring finance cost? Tell me. What is happening as a result of incurring finance cost? Our deferred liability is increasing, right? Our deferred liability is increasing, right? Is it clear? See what happened to our deferred liability from 18 million? It increased to how much? 19.8 million, right? So liability is increasing. So debit or credit? Debit or credit? Liability is increasing. Debit or credit? It will be credit. Deferred liability. Deferred liability. How much? 1.8 million. Is this clear? Is this picture perfect? Is this picture perfect? I want everyone's response. I want everyone's response. Is this clear? Shall we move on? Shall we do a basic consolidation now? Are you guys ready? Are you guys confident? Are you guys confident? Shall we do a basic question then? Shall we? Okay, okay. Then we'll do a basic consolidation and then we'll move to what? Then we'll move to more advanced questions. Okay. Okay. We'll be working out this question. Okay. See, I'll tell you guys. If you guys listen to this class properly, I'm 100% sure that you will be scoring full marks in consolidation. Okay. If you listen to this class properly, you will be scoring full marks in consolidated SOFP. So shall we start? Shall we start? Okay, okay, fine, fine, fine. So this is a basic consolidation question. Okay. So let's see. See, the following statements of financial position have been prepared at 31st December 20x8. So we can see non-current assets, current assets, equity, liabilities, etc., etc. So let's read this out. Okay. Dickens acquired 16,000 ordinary shares. 16,000 ordinary shares in Jones on 1st Jan 20x8 when Jones retained earnings stood at 20,000 and its share premium was $10,000. On this date, the fair value of the 20,000 non-controlling interest in Jones was 12,500. The Dickens Group uses the fair value method. See, I told you, right? There are two methods to calculate NCI. One is fair value. What is the other one? What is the other method? I've told you yesterday. What is the other method in order to calculate NCI? Net assets method. Remember, we have two methods to calculate. See, I told you regarding goodwill. There was two methods. One is partial goodwill and one is full goodwill. In full goodwill, what will we do? In full goodwill method, what happens if an impairment occurs for goodwill? What happens in a full goodwill method or in a fair value method? What will happen to the impairment? What will happen to the impairment? So let's say that getting a 10 million impairment on goodwill. If you are calculating goodwill on the basis of fair value method, how will we treat this impairment? This impairment of 10 million, how will we treat it? How will we treat it? Tell me. See, in a fair value model, we are using fair value model to calculate goodwill. So, if we incur an impairment on this goodwill, will we recognize it fully? Will we recognize that impairment fully? Tell me, yes or no? Yes or no? Will we recognize that impairment fully on our goodwill? I've taught you this yesterday. Tell me, I want everyone's response. Those who attended my class yesterday. Will we recognize it fully? Will we recognize it fully? No, guys, no. We won't recognize it fully in a fair value model. See, we will split that impairment into two. We will split that impairment into two. How will we split it? How will we split it? I taught you this yesterday. How will we split it? How will we split the impairment? Based on what? Based on what? Based on what will we split? We will split it based on percentage of acquisition. That is, for let's say 80% is acquired by the parent company. So 80% of the impairment will go to parent and the remaining 20% will go to the NCI. Do you guys remember this? Do you guys remember? So what about partial method? What about partial goodwill method? Partial goodwill method or net assets method. How will we treat this NCI? Sorry, how will we treat this impairment? Will we recognize it fully or will we recognize it on a split basis? We'll recognize it at full. So when will we recognize it partially? When will we recognize the impairment partially? In which method? In which method? Fair value method or full goodwill method? Got it? Is it clear? Will you guys forget it now? Will you guys forget it again? Will you guys forget it again? Okay, fine. So, which method are we using here in order to calculate goodwill? In this question, fair value method, right? We are calculating goodwill using fair value method. So, what have see, they are asking us to prepare the consolidated statement of financial position. Okay, so consolidated SOFP for the year ended 20x8 of Dickens Company. Okay. Okay. So before starting with the consolidated statement preparation, what should we do? What should we do before preparing this consolidated statement of financial position? Tell me. What will we do? We have to do some workings, right? We have to do some workings. Am I right? We have to do some workings. So tell me, what is the first working? 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 What do you guys mean by PC? What is PC? Yeah. See, we'll calculate the consideration in working three, right? Okay. So what is the first? What is our okay, fine, fine, fine. See, we'll consider see by we will calculate the purchase consideration in working three, right? In order to calculate goodwill. So is there a need to is there a need to calculate it now? No, right? We are already going to calculate in working three. So what is the first working? It is group structure. Group structure. So what is the group structure here? We are the parent, Dickens Company. Acquired whom? Acquired whom? John's, right? How much percentage did we acquire? How much percentage did we acquire? 80 percentage, right? So you can see the value of 20% of NCI is given 12,500. So what else is remaining? 80 percentage of John's. Is this clear? We acquired 80 percentage of John's. What is our working to? 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 Tell me. Net assets of subsidiary. Net assets of subsidiary. Net assets of subsidiary. Okay, fine. So in order to in order to know the net assets of subsidiary, what are the values that we need? We need the values at date of acquisition as well as date of reporting, right? We need both the values, right? Date of acquisition and date of reporting. What all are the values that we will include here? What all are the values that we will include here? Tell me. Share capital. Tell me what is the share capital. See, what are these values? Are these opening or closing values? Are this date of acquisitions value or date of reporting's value? Whatever is mentioned in this FS, is it reporting value or acquisition value? Date of reporting or date of acquisition? Date of reporting or date of acquisition? I'll repeat my question once again. See, you can see the values they have mentioned here, right? Does this value belong to the date of acquisition or date of reporting? Where does this belong to? Is it date of reporting's value or is it date of acquisition's value? See, when did we acquire? When did we acquire Jones? We acquired Jones on 1st Jan 20X8. That is the acquisition date, right? That is the acquisition date. But what is here? What is it given here? See, they have given the individual financial position of Dickens and Jones as at when prepared at 31st December 20X8. So is it date of reporting or date of acquisition? It's date of reporting. So what is the share capital date of reporting? What is the share capital at date of reporting? Tell me. It's 20,000, right? It's 20,000. My next question is what is the date of acquisition? What is the share capital of date? Share capital at date of acquisition. Are they issuing any shares? Are they mentioning about any issuing of shares? Are they mentioning about any issuing of shares? No. So what will be the share capital at date of acquisition? What will be the share capital at date of acquisition? 20,000 itself, right? 20,000 itself. What next? What next? share premium. You have share premium. What is the share premium at date of reporting? What is the share premium at date of reporting? It is 10,000. Now coming on to the question, here we can see that its share premium was 10,000 at the date of acquisition. So what is the share premium at date of acquisition? What is the share premium at date of acquisition? It is also 10,000. So what else is there? What else do we need? What else do we need? What else do we include in calculation of net assets? We include retained earnings. Retained earnings. What is the retained earnings here? What is the retained earnings here? Tell me. How much is the retained earnings at date of reporting? What is the retained earnings at date of reporting? It is 25,000. What about what about the date of acquisition? What is the retained earnings as per date of acquisition? How much is the date? How much is the retained earnings at date of acquisition? It is 20,000. See, this mentioned the retained earnings stood at 20,000 at the date of acquisition. So how much is it? It is 20,000. So what is the net assets at the date of acquisition? It is 50,000 net assets. What about a date of reporting? It is 55,000. So tell me, what does this mean? What does this mean? What does this mean? Tell me, I want everyone's response. At date of acquisition, it was 50,000, and at date of reporting, it was 55,000. Yeah. Post acquisition gain or post acquisition profit. Post acquisition profit. How much is the profit? How much is the profit? It is 55,000 minus 50,000, which is how much? 5,000. 5,000. So who? How will we show this 5,000? How will we show this 5,000? How will we show this 5,000? Can we show this as profit in SOFP? Can we show this as profit in SOFP directly as post acquisition profit? Can we show it? How will we show this? 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 We have to split it, right? We have to split it into parent company and NCI. So what is the parent company's share? What is the parent company's share? Yeah, that is into 80%. What about NCI? What about NCI? Into 20%. Is this clear, guys? Any doubts? Any doubts? Any doubts? Any doubts? Any doubts? Okay, okay, fine, fine. See, if you have any minute doubt, just ask me, okay? I'm ready to help. Is it clear for everyone? I want everyone's response. Is it clear for everyone? Is it clear for everyone? Okay, 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 fine, 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 fine. Okay. So what is our next working? What is our next working? What is our next working? Goodwill, right? Goodwill. It is goodwill computation. Now, in order to find the goodwill, what all are the values that we need? I need every values that we need. Tell me. Tell me every single value that we need in order to calculate goodwill. I want everyone's response. Tell me what all are the values? What all are the values that we need in order to calculate goodwill? Purchase consideration. Okay. What else? What else? What NCI? Fair value of NCI, right? Is it? Are these the only required values? Net assets at acquisition. That's very important. Okay. Net assets at acquisition. So tell me one by one. What is the fair value of consideration here? Let's read the question. What is the fair value of consideration? How do we find the fair? See, have they mentioned about any fair consideration that they've given us? Have they given consideration directly? No. How will we find this? How will we find this? Any idea? How will we find this? It's not mentioned in the question. So how will we find this? See, can we find it from SOFP? Can we find it from SOFP? What is the consideration? I told you, fair value of consideration is equal to the cost of investment. What is the cost of investment here? 60,000, right? Got it. What is the value? 60,000. What about fair value of NCA? Is it given? Is the fair value of NCA given? Tell me. Is the fair value of NCA given? Yes. How much is it? How much is the fair value of NCA? How much is the fair value of NCA? It's 12,500. Okay. Coming on to what is next? Net assets. Net assets at what? Net assets at what? Net assets at acquisition. Date of acquisition. How much is it? 50,000. So what is the goodwill? What is the goodwill? 20,500, right? 22,500. Is it clear, guys? Is it clear? Is there any goodwill impairment happening in this scenario? Is there any goodwill impairment? No. So what will this goodwill be? If there is no impairment, means this will be the goodwill at date of reporting. Got it? Is it clear, guys? Is it clear? So what about working for? What is working for? What is working for? NCI. NCI. Exactly. It is NCI. How do we calculate NCI? What do we need first? What do we need? Fair value of NCI. How much is the fair value of NCI? 12,500, right? What next? What will we add next? What will we add next? Share of post acquisition profit. What is the share of post acquisition profit? Share of post acquisition profit. How much is it? How much is it? It is 1,000. Okay. So what is the NCA's value? What is the NCA's value? It's 13,500, right? Yes. 13,500. Is this clear? Is net NCA's computation clear? Okay, okay, fine. What about working five? What about working five? What is working five? Group retained earnings. Group retained earnings. How do we calculate group retained earnings? What are the values that we need? What are the values that we need? We need what? Parents retained earnings. Parents retained earnings. What is the parents retained earnings here? It is 70,000, right? Okay, what else? Parents share of Post acquisition. What is it? How much is it? Post acquisition profit. How much is it? 4,000 into 4,000. Is there anything else? Is there anything else? No, right? So 74,000. This is what? Group retained earnings. So are we done with the workings? Are we done with the workings? Tell me. So shall we start making the consolidated SOFP? Shall we start? Okay. Guys, tell me what is the first thing that we'll record here? While preparing SOFP, what is the first thing that we will show in SOFP? What is the first thing that we'll show? Assets, right? That is non-current assets. Non-current assets. So under non-current assets, what do we have? Under non-current assets, what do we have? We have property, plant and equipment, right? We have property, plant and equipment. What will be the value of property, plant and equipment? What will be the value of property, plant and equipment? What will be the value of property, plant and equipment in the consolidated SOFP? What will be the value? Exactly. It will be 85,000 plus what? 18,000. How much is it? 103,000. So, is there any non-current assets left? Yeah, exactly. We have goodwill. Which working was it? See, we have to refer the workings, okay? Working 3, right? What is the goodwill? What is the goodwill? It's 22,500, right? It's 22,500. Anything else? Anything else? Anything else? What about this? See, isn't it a non-current asset? Isn't it a non-current asset? So why are we not including this investment? It's an intra-group transaction. Told you, remember, it's an intra-group transaction and we will not be showing what? Investment in subsidiary. See, I told you, remember, in individual FS, we'll be showing it as investment in subsidiary. But when it comes to consolidated SOFP, how will we show? We will show it in the term of goodwill. Remember? Yeah. So, what about current assets? Are there any current assets? Current assets. How much is the current assets? What will be the value? It will be 160,000 plus 84,000. 160,000 plus 84,000. So what will be the total? What will be the total? The 369,500. What is this? This is the total assets. This is the total assets. What next? What next? After asset, what next? Equity, right? We have equity. In equity, what all things do we have? Okay, my question is, What all things will be showing equity in the consolidated SOFP? Tell me what will be the share capital here. What will be the share capital? Tell me. I want everyone's response. What will be the share capital here? Will we include subsidiary share capital in our equity in the consolidated SOFP? Exactly. We won't show what? We won't show the subsidiary share capital. What is our share capital? Is 65,000. So what about share premium? Same. How much is it? 35,000. What about retained earnings? Will we show this retained earnings? Will we be showing this retained earnings? No. We'll be showing what? Group retained earnings, right? Group retained earnings. How much is it? 74,000, right? From our working not 5. See, always refer to this working not 5, okay? Or else they won't know how you got. So, anything else to be included in equity? Exactly. NCI. What is the value of NCI that we got? Working out 4. What is the value of NCI that we got? 13,500. So, what is the total equity? 18,700. 187,500. Okay. So, what else do we have? Liabilities, right? Current liabilities. How much is it? How much is the current liability? How much is the current liability? 135,000. Is it only 135,000? No, we have to add what? 47,000. So how much is it? How much will be the total? I want the total equity and liability. Total equity and liability. How much is it? Is it clear, guys? See, assets is equal to equity plus liability. Got it? Is this clear, everyone? This is the basics of consolidation. Very, very basic. See, I took this because you guys told me you are very weak in consolidation. Okay. Is this clear? I want everyone's response. Please respond, guys. Please respond. Is this clear? Can we move on to the advanced part? Can we move on to the advanced part? Okay. So now next. Okay. I want you guys to do this question. I want you guys to do this question. See, I'll give you three, like before 5:10, you have to give me the answers of these both. This test your understanding too. Before 5:10, I want the answers. Before 5:10, it's 5:06 now. Okay, before 5:11. Before 5:11, I need the answer for this. Come on, come on. Do it as soon as possible. And once you're done, update me in the chat box. I want everyone's response. Okay, I want everyone to do this. What about the rest? Did you guys get it? Did you guys get the answer? Did you guys get the answer? Did everyone else get it? Or do you want me to work it out? Tell me, guys. Do you want me to work it out? Do you want me to work it out? Guys, tell me, do you want me to work it out? Guys, tell me, do you want me to work it out? Okay, okay, fine, 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 fine. See, this is what I call net assets method and fair value method. Okay, I'll just work it out for the rest of you guys. See, we have to calculate what? Goodwill. Goodwill, that is working not three. In order to calculate goodwill, what do we need? What is the first method they're asking us? What is the first method that they are asking us? Which method? Which method? Proportionate method, right? Proportionate, proportion, proportionate net assets method. Okay. So, in order to calculate goodwill, what we need? What do we need first? What is the first thing that we need? What is the first thing that we need? That is purchase consideration. What is the purchase consideration here? Tell me. Purchase consideration or fair value consideration. What is the consideration? 240,000. 240,000, right? Okay. Now, see, just ignore the second question, okay? Have they given us the NCI's value? Don't read the second part. As per the first part, have they given us the NCI's value in the first question? No. So in that case, I told you, how will you calculate? How will you calculate goodwill? Using net asset method, right? How do we calculate net assets? We'll directly subtract net assets. We will directly subtract net assets. Net assets. See, how much did we acquire? How much percentage of Daniel did we acquire? Tell me. How much percentage? 60 percentage. So, how much of the net assets are we accountable for? 60 percentage, right? What is the total net assets? Tell me. What is the total net assets? of Daniel. Tell me. Total net assets 360,000. How much do we own? 60 percentage, right? We own 60 percentage, right? Am I clear? Are you guys getting this? We own how much? 60 percentage. So, what is the goodwill? What is the goodwill? What is the goodwill? What is the goodwill? 24,000. If you guys have any doubt regarding this, please tell me. Please tell me in the chat box. Tell me. Do you guys have any doubt regarding this proportionate net assets method? Any doubts? Is it clear? What about fair value method? What about fair value method? How do we calculate fair value method? What all are the values that we need? First, we have purchase consideration. What is the purchase consideration here? Same as before, that is 240,000. What is the difference here? What is the difference between proportionate net assets method and fair value method? We will include what? NCI. What is the fair value of NCI here? What is the fair value of NCI? What is the fair value of NCI? It is 150,000. What will be subtract from this? What will be subtract from this? Net assets at date of acquisition. How much is it? Is it 216,000? Is it 216,000? It is 360,000. Because we are calculating this based on fair value method, we will take the full net assets. Okay. So what is the goodwill here? 30,000. Is this clear for those who didn't understand this? Is it clear for those? Everyone. Okay, fine. So shall we do the next question? See, I want you to respond very quickly, okay? Or else you guys won't get time. See, we have to move to the advanced part, okay? Before that, okay, just give me a minute. Okay. Can you guys read this? See this? Can you guys see this? Okay. So in the previous case, how much subsidiaries did we have? How much subsidiaries did we have in the previous case? We only had one. But here what is happening? Here we have two subsidiaries, right? We have two subsidiaries. So let's see how we will treat this. This is illustration two. Okay. So we are which company? We are P. And our subsidiaries are S and T. So how will we prepare consolidated SOFP? How will we prepare? How will we prepare consolidated SOFP? Tell me. Before working it out, we need what? We need to have some workings, right? We need to show some workings. What is the working one? What is the working one? Group structure. How will we show group structure in this case? See, we have P company. Acquired who? S company. Acquired S company. How many shares? How many shares did they acquire in S company? Tell me. How much of the shares of S company is acquired by P company? 75, right? It's 75 of S company. What about T company? What about T company? How much did we acquire? 80%. We acquired 80%. What is the working two? What is working two? Net assets of subsidiary, right? So in this case, how will we calculate net assets? See, I'll tell you. We have date of acquisition, date of reporting. We have what? S company. Do we only have S company? We have two subsidiaries, right? So what is the next? We have T company as well. So we have date of acquisition, date of reporting. Now tell me, what is the first thing? Share capital, right? Share capital. What is the share capital at date of reporting? What is the share capital at date of reporting for S company? It is 50. It is 50. What about acquisition? Same, right? They are not issuing any shares. So for acquisition, it's also 50. What about T company? What is it at date of reporting? 60. What about acquisition? 60 only, right? No additional acquisitions is being made, right? Okay. See, they are just asking us to calculate this, okay? Calculate these values in property or on this in SOFP, consolidated SOFP. So tell me, what is the net assets? What, see, after share capital, what should we add? What should we add after share capital? Retained earnings. What is the retained earnings at date of reporting for S company? For S company, what is how much is it? 80. What about T company? 20. What about acquisition? What is the retained earnings as of acquisition? What is the retained earnings as on acquisition for S company? It's 20,000, right? Okay. What about T company? It's how much? No, wait. Yeah, okay. What about T company? It is 5K. So what is the net asset at the date of acquisition? This is 70. In this case, it is 130. What about here? It is 65. And here it is Here it is 80. So now tell me, what should we do? See, tell me what is the post acquisition profit? Post acquisition profit of S. How much is it? 130 minus 70, right? Is 60. What about profit? Post acquisition profit. Post acquisition profit of T company. Of T company. What is it? How much is it? 80 minus 65. Right. Is this clear, guys? So what should we do with this post acquisition profit? What should we do this? What should we do with this post acquisition profit? We have to split it, between parent company and NCI. So parent. So what is the parent share of profit? Parent share of profit. Tell me. Equal to, for S company, how much should we have? For S company, how much is the profit of parent company? What is the parent share for S company? It's 75 percentage, right? It is 75 percentage. Plus, what about T company? What is the share? What is the investment in T company? 80. So it is 0.8. So how much is it? How much is it? 57. What about NCI? What about NCI? NCI. In the case of S company, how much? How much is the percentage? 25, right? Plus, in case of T company, how much is it? How much is it in the case of T company? Into 0.8. Plus into 0.2. It is 18. Is it clear, guys? Is it clear? Any doubts? Any doubts? There are any doubts, just ask me. If there are any doubts, ask me. Do you guys have any doubts regarding this? No, right? Okay. So what next? We need working three goodwill. Goodwill. Okay. What is the goodwill here? How do we find goodwill? Do we only have one goodwill here? Do we only have one goodwill? How much goodwill we have here? We have two companies. So there will be two goodwills, right? Goodwill of S company and goodwill of T company. So what is the goodwill of S company? Let's compute the goodwill of S company. Tell me, what is the fair value of investment or fair value of consideration? What is the consideration? Consideration. What is the consideration here? What is the consideration given for S company? It is 120. Right. So what next? NCI's fair value. Fair value of NCI. How much is it? How much is it? 20. 20. What is the net assets? What is the net assets? What is the net assets at date of acquisition of S company? It is 70. So what is the goodwill? What is the goodwill? It is 70. This is of S company. What about T company? Goodwill of T company. Tell me, what is the consideration? How much is the consideration? How much is the consideration? 60. What next? NCI. What is the value of NCI? What is the value of NCI? 15. 15. What is the net assets? What is the net assets? At date of acquisition. What is the net assets? Yeah, it's 65 minus 65. So what is the goodwill here? It is 10. We got the goodwill also, right? Now coming on to working for. What is working for NCI? How do we calculate NCI? How do we calculate NCI? See, for NCI calculation, let me tell you, we have fair value of NCI. We have both cases, right? We have S company, we have T company. What is the fair value of NCI for S company? Fair value of NCI 20, right? What about T company? It's 15. What next? Profit. What is the profit attributable to NCI here? See, this was the total profit of S company into how much percentage? 0.25, right? So it is 15. Am I right? It's 15. What about T company? What is the profit for T company? It's 15. How much do we have? 0.2. So how much is it? 3. Is it clear, guys? Is it clear? So what is the value of NCI? It's 35 here and 18 there. So, see, we are not asked to prepare SOFP, but they are asking the value of PP in SOFP. But before that, we have one more working left. What is the one more working? Group retained earnings, right? Working 5. Group retained earnings. What do we have in group retained earnings? We have the retained earnings of parent. Parent retained earnings. How much is it? How much is it? It is 220. Right. What next? What next? Parents share, right? We have parents share of profit. How much is it? We have already found it out. How much is it? 57. Anything else? No, right? So sum. So what is it? 277. That is group retained earnings. So now tell me, what will be the value of PP in consolidated SOFP? What will be the value of PPE in consolidated SOFP? That is their first requirement. See, what is the value? What will be the value? Tell me. It will be 160 plus 70 plus 50. That is 280. What is the second requirement? They are asking about the goodwill. What will be the goodwill? What will be the goodwill? It will be, what is the goodwill that we found out? See, S company is 70 plus T company is 10. So how much is it? 80. So what all are they asking? See, they are asking about share capital. They're asking us about share capital. What is the share capital that we will show in consolidated SOFP? What is the share capital that we will be showing in consolidated SOFP? Consolidated SOFP. How much will it be? It will be 100. What is the next thing they are asking us? Retained earnings. Retained earnings. How much is the retained earnings that will show? How much is the retained earnings? It will be 277. Is it clear, guys? It will be 277. What next? NCI. What will be the value of NCI? Tell me. What will be the value of NCI? 35 plus 18. So how much will it be? 53. Is this one also clear for you guys? Is this also clear for you guys? Any doubts? I hope this is clear for everyone. Okay. So, are you guys confident with consolidation now? Are you guys having a proper base with regards to consolidation? Are you guys having a proper base now with regards to consolidation? I want everyone's response. What are the rest? So, we'll take a break. Be back by 5:50 and we'll start doing what? We'll start doing an advanced consolidation. Okay. Once you are done with that consolidation, trust me, you will be able to you will be able to score full marks in consolidation once you understand that particular problem. Okay. Whatever we have done is the basics. Okay. Whatever we have done so far is the basics of consolidation. You can expect this in uh, section A and section B questions. Okay. You can expect the small calculations, that is the cost of investment, etc. in section A and B. But regarding to consolidation section C, you will be receiving an advanced level question. Okay. So don't worry, we'll be working out a question after the break. And believe me, you will score full marks if you understand. If you understand that question, how you will tackle a question, if you'll understand that, you'll be able to do what? You'll be able to score full marks in consolidated SOFP if it comes for exam. Okay. So take a break. Be back by 5:55 then. Okay. Or be back by 5:50. Be back by 5:50. Okay. Sorry guys, back. Can we start? Can we start? I hope everyone is back. I'm starting with this consolidation. See, it's a bit advanced question, but believe me, once you do this now, you'll be good with every other consolidated statements. Okay, so shall we start? Hope everyone is back. Okay, so let me share my screen just a minute. We'll be working out peppermint and spearmint. I don't know if you guys have worked it out. We'll be working out what? We'll be working out peppermint and spearmint. So, see, before doing the workings, you have to read the question. Okay, have to read the question. Now read this question. Tell me, read this. Tell me once you're done. Tell me once you're reading this question. Tell me once you're done. Tell me once you're done. Okay, reading. Are you guys done reading? Are you guys done reading the first paragraph? Okay. Okay. Fine. Fine. See, I want you guys to read this further information as well. See, I'll read it out. See, at acquisition, the fair values of Spearmint's plant exceeded its carrying amount by 200,000. The plant had a remaining useful life of 5 years at this date. For many years, Spearmint has been selling some of its product under the brand name of Mint Fresh. At the date of acquisition, the directors of Peppermint valued this brand at 250,000 with a remaining life of 10 years. The brand is not included in Spearmint's statement of financial position. Okay. The consolidated goodwill has been impaired by 258,000. The Peppermint Group values the non-controlling interest using the fair value method. What is the method here? It's fair value method. At the date of acquisition, The fair value of the 20% NCI was 380,000. Shall we start doing this? Shall we start doing this question? Are you guys ready? Okay, fine. So what should we prepare? We should prepare consolidated SOFP of whom? Who is the parent here? Who is the parent here? Is it peppermint or spearmint? Is it peppermint or spearmint? Peppermint or spearmint? Peppermint. Peppermint group. Shall we start? Okay, fine. So, workings. What are the workings that we will do? Working one is group structure. Peppermint. Working one. Peppermint. What is peppermint? What is peppermint doing here? It is acquiring 80 percentage of 80% of spearmint. 80% of spearmint. Coming on to working two. So you have to be careful, okay? See, I've given you a formula yesterday. You guys remember that? Net assets formula. What all things this specifying what all details will be showing here. Okay. So fine. Wait. So we have net assets. Okay. We have net assets computation, right? So tell me, we have what date of acquisition and date of reporting. So what is the first thing that we will consider in in working two? What will be considered in working two? Share capital. It is share capital. What is the share capital of date of acquisition and date of disposal, date of reporting? What is the share capital, date of reporting, and date of acquisition? It is 500, right? They are not issuing any shares, so there is no change in share capital. What else? What else? What else will we show? Retained earnings. Retained earnings. What is the retained earnings here? Of spearmint. Is it date of reporting or date of acquisition? Is it date of acquisition or date of reporting? Tell me. Where will we show? See, this books belongs to what? Date of reporting or date of acquisition? These values are based on date of acquisition or date of reporting. It is date of reporting. What is the value of retained earnings? What is the value of retained earnings? What is the value of retained earnings? It is 300, right? What about acquisition? What about acquisition? Is it mentioned in the question? Is it mentioned in the question? Where is it mentioned? See, when the reserves of spearmint stood at 125,000. Got it. So now my question is, see, there are some more additional things that we will consider here. Do you guys remember about fair value adjustment? Revaluation surplus, I told you right that day. Yesterday, I've told you if there is any revaluation, we will show it here. Got it? We will show it here. So what are the fair value adjustments here? Tell me. What are the fair value adjustments here? What are the fair value adjustments here? Tell me. Plant. Plant. How much? How much is the fair value adjustment? How much is the how much is the fair value adjustment? For plant, it is 200. 200. Okay. So tell me, since since we are since we are revaluing this asset, what happens to its depreciation? What happens to its depreciation? It changes, right? It changes exactly. So we have to do what? We have to adjust the depreciation here. So what is the increase? What is the increase in fair value? What is the increase in fair value? Tell me. What is the increase of fair value for plant? What is the increase for fair value of plant? It increased by 200, right? It increased by 200. So, what is its remaining useful life at acquisition? What was its remaining useful life at acquisition? Tell me. What was its remaining useful life at acquisition? 5. When did we acquire? When did we acquire Spearmint? We acquired Spearmint 2 years ago, right? We acquired Spearmint 2 years ago, right? So how much years depreciation should we charge? So how much years depreciation should we charge? Exactly. We should charge depreciation for 2 by 5. That is 2. 2 years. What is the remaining useful life? What is the remaining useful life? See, I'm talking about the remaining useful life at the date of acquisition, not the remaining useful life as of now. Asset acquisition. What was the remaining useful life asset acquisition? Not 3, it's 5. Okay, see, it's 5. You know why? See, we have not charged this depreciation. Okay, we have not charged this depreciation in the books. So, as a reason, see, what was the increase at date of acquisition? It was 200, right? At the acquisition, the depreciation increased by 200. Increased by 200. So we have to charge depreciation on that particular 200. So at that particular date, that is at the date of acquisition, what is the remaining useful life? What is the remaining useful life at the date of acquisition? At the date of acquisition, what was the remaining useful life? See, it's mentioned. See, what is the useful life? 5 years, right? See, 5 years. So how much is it? It's 5 years. So how much years depreciation should we charge? How much years have passed by since acquisition? 2. So how much will be the depreciation? 5. 2 divided by 5. That is 80. Did you guys get this? Is it clear? Is it clear for everyone? So similarly, what else is being revalued? What else is being revalued? Brand. What is the brand's fair value? Brand. How much? By how much did it increase? 250,000. Why it got increased by 250,000? Because it was not mentioned in the books. So we'll take the complete whole value. How much is the value? 250,000. 250,000. So we we acquired the subsidiary 2 years ago, right? We acquired the subsidiary 2 years ago. So what should we charge on this amount? What should we charge on this brand? What should we charge? We should charge amortization. Amortization. So how much will we charge on this? See, what is the useful life? What is the useful life? Yeah, exactly. What is the useful life? What is the remaining useful life of brand at the date of acquisition? This 10. How much years have passed since acquisition? How much years have passed since acquisition? It is 2, right? It is 2. So 2 divided by how much? 2 divided by 10. 2 divided by 10. So how much is it? It is 50. So now tell me, what is the net assets here? What is the net assets? Net assets. We have some. What else do we have here? We have. So what is it? What is it? What is it? How much is it? What is the difference? What is the difference? So tell me, what is the profit? Profit post acquisition. How much is it? How much is it? 45. 45. So what is the parents' share here? Parents' share. What is the parents' share? 80 percentage. What about NCI? What about NCI? 20. 20. Is it clear? Is it clear? Okay, okay. So what about working three? Goodwill. Working three, goodwill. Tell me, what do we need in order to calculate goodwill? What do we need in order to calculate goodwill? Tell me, what do we need? Purchase consideration. Purchase consideration. I told you, if you don't know how to calculate purchase consideration, will you be able to calculate goodwill? Will you be able to calculate working three? No, right? So we have to know the fair value of consideration. Now tell me, how much types of consideration is being provided in order to acquire these shares? Tell me. What all considerations are here? What all consideration? Cash, share, and deferred consideration, right? We have cash, we have share, and we have deferred consideration. Okay. So now tell me, what is the cash consideration here? We'll calculate fair value of consideration. Consideration. What do we have? Cash. What is the cash consideration here? Yeah, 1 million. That is 1,000. Right, 1,000. We have 1 million. What next? What is being provided additionally? What is being provided additionally? Share. How much shares have been provided? Share consideration. Share consideration. How much shares have we provided them? We provided them. Is it 360? Oh, you're telling me about the amount. Okay, fine, fine, fine. How much is it? 200,000. So we are showing it as 200. Okay, 200. 200 shares with a nominal value of 1 and a market value of 1.8. So which value will we use? Nominal value or market value? Nominal value or market value? Market value. How much is the market value here? How much is the market value here? Tell me. 1.8. It's 360. Okay. I hope this is clear so far. What about deferred consideration? The next consideration is deferred consideration. What about deferred consideration? It was also agreed that Peppermint would pay a further 500,000 in 3 years' time. Further 500,000 in 3 years' time. So it's being paid when? When is it being paid? When is it being paid? Is it paid today? Is it paid today? No. No. We are not paying it today, but we are paying it after 3 years. So what should we do? What should we do? Present value. PV. We have to find the PV of the consideration. What is the PV? What is the discounting factor? What is the discounting factor being provided here? Discounting factor is provided directly. So what is the consideration? 500,000 into what is the discounting factor? It is 0.75. That is 375. So what is the fair value of consideration? What is the fair value of consideration? It is 1735. 1735. Is that it? Is that it? Anything else? We are done with fair value of consideration. What next? What next? What next? Tell me. Fair value of NCI. Fair value of NCI. Is the fair value of NCI given here? Tell me. Is it given? Is it given in the question? See, most probably fair value of NCA will be given. Okay, 99% of the time, fair value of NCA will be given. What is it? How much is it? 380,000. So, anything else? What is the next value that we need? What is the next value that we need? Yeah, net assets at date of acquisition. How much is it? How much is it? We have found it out, right? How much is it? 1075. So, what will be the goodwill at date? The goodwill that you're finding at is at date of, the goodwill that we are finding here is the goodwill at date of acquisition. Fine. Tell me, what will be the goodwill here? It will be some 1040. 1040. Now, will we show goodwill at date of acquisition in the books? Will we be showing goodwill at date of acquisition in the books? No. Whatever be the asset or whatever be the liability, will always show its closing amount. So we need to find what? We need to find what? Goodwill at date of reporting. What is the goodwill at date of reporting? Tell me. What is the goodwill at date of reporting? How will we find the goodwill at date of reporting? Impairment. What is the impairment? Are they mentioning about any impairment? Are they mentioning anything about goodwill impairment? Are they mentioning anything about goodwill impairment? What is the goodwill impairment? See, it's mentioned 258. How much is it? 258. So what will be the closing goodwill? It will be 782. Is it clear, guys? Is it clear? No doubt so far, right? Okay. Okay. Fine. So we found what? Carrying amount of goodwill. What is the next working that we have here? See, before that, one more thing, okay? See. Just a minute. See, there is one more thing mentioned in the question. Can you guys read this? The shares and deferred consideration have not yet been recorded. The shares and deferred consideration have not yet been recorded. So let me tell you guys one thing. See, I've taught you the journal entries yesterday, right? Are you guys confident with journal entries now? I've taught you the basics of journal entries yesterday regarding every consideration. Regarding every consideration, I've taught you what? Journal entries, right? So they have not included the shares and deferred consideration of what? Of They have not included the shares and deferred consideration. So we have to include it, right? We have to show it in the books, right? Am I right? See, while calculating goodwill and all, we considered it. But what will be the journal entry in respective of this transaction? What will be the journal entry? Okay, I'll ask you one by one. Okay. See, journal entry, we have two parts, debit and credit. Now, take the situation of deferred consideration. Okay. Take the scenario of deferred consideration. See, as a result of this contract, as a result of providing deferred consideration, what are we receiving? What are we receiving as part of giving them deferred consideration? Tell me. Exactly. Investment. Investment is an asset. So, debit or credit investment? Debit or credit investment? Debit, exactly. Debit what? Investment. Investment in subsidiary or whatever, investment. What is the amount? What is the amount? What is the deferred consideration? What is the deferred consideration that we found out? What is the deferred consideration? What is the deferred consideration? What is the deferred consideration here that we are giving them? 375. See, it's 375. So what will be the amount of investment? What will be the amount of investment? What will be the amount of investment? 375. What will be on the credit side? What will be on the credit side? Tell me. What will be on the credit side? It's a deferred consideration. We are not paying it now. We are paying it in the future. So what is it? It's a deferred liability. It is a deferred liability. So how much will be the amount? How much will be the amount? 375. So we are done with the deferred liability. See, have they only avoided deferred consideration? Have they only avoided deferred consideration? Have they only avoided deferred consideration? See, read the question. See, read the highlighted part. Has they only avoided deferred consideration? Have they excluded something else? Share consideration. So, as a part of giving shares or issuing shares, what are we receiving? As a part of issuing shares, what are we receiving? What are we receiving? Investment. So, debit what? Investment. Investment. What is the investment? What is the value of share consideration? What is the value of share consideration? Tell me. What is the value of share consideration? 360. So what will be the value of investment? What will be the increase in investment? Tell me. 360. So to credit what? See, I told you, whenever we are issuing shares, what will happen on the credit side? What will happen on the credit side? Share capital and share premium. Two entries. What are they? Share capital and credit share premium. So what will be the share capital? How will we calculate share capital? Based on what value? Based on what value? Based on what value will we calculate share capital, nominal value? How many shares have we issued? We have issued 200,000 shares. What is the nominal value? $1. So what will be the value? 200. Is it clear? What about share premium? What about share premium? It will be the remaining. What is it? 160. Is this journal entry clear, guys? Are you guys confident with journal entries now? Are you guys confident with journal entries now? Got the concept right? Okay. Fine, fine. So, what next? We have working five, right? We have working five left. Okay. Mm, yeah. So, what is working five? NCI. Sorry, we are working four. Right? This is working four. Okay, fine. Working for NCI. So, what is the first value that we need? Fair value of fair value of fair value of NCI. What is it? What is it? What is the fair value of NCI? How much is it? 380,000. What else do we need? What else do we need? What else do we need? We have fair value of NCI. Then what should we add? What should we add here? What should we add? See, NCI calculation. Remember, how do we calculate the closing of NCI? How do we calculate share of post acquisition profit? How much is the share of acquisition profit for NCI? Share of profit. How much is it? 9. What else? See, in which method did we calculate? In which method did we calculate goodwill? Tell me, everyone in the chat box. In which method did we calculate goodwill? Fair value. So, remember what I told about fair value. In a fair value model, if we are having any impairment, on goodwill, what will we do? What will we do? We will split the impairment based on ownership, right? We will split the impairment based on the shareholdings. So tell me, we have to show this here, right? See, NCI's share of impairment we have to show, right? See, what is the impairment that is attributable to NCI here? What is the total impairment? What is the total impairment? Tell me. What is the total impairment? 258. So how much will belong to NCI? How much will belong to NCI? It is 51.6. We can approximately take it as what? 52. Okay. Well, how much is it? Impairment. NCI share of impairment. How much is it? Into how much percentage? 0.2. 51.6. Okay. What else? What else? Is there anything else? Is there anything else? So, right. Share of profit, NCI's share of impairment. Then what? We'll get the closing. NCI at date of reporting. How much will it be? 337.4. Is this clear so far, guys? Do you guys have any doubts? Any doubts? Any doubts? Any doubts? So far, any doubts? Okay. So let's move on to working 5. Are you guys ready? Are you guys ready? We have working 5. What is working 5? Group retained earnings. Okay. So what is the first thing that we'll consider here in group retained earnings? What is the first thing that we'll take into consideration? What is the first thing? Parents retained earnings. Parents, that is who? Who is the parents? Spearmint. What is the parents retained earnings? What is the parents retained earnings here? How much is it? How much is it? This 1,400. Okay. So what else? What else? What else? Tell me. What else will we take? In the normal cases, in the basic consolidation, what will we take here? What will we take? What is the next value that we will be taking? Tell me. Post acquisition profit. Post acquisition profit. Wow, how much is it? How much is the post acquisition profit? 45. Into how much percentage? 0.8. How much is it? 36. So now, now, see, have we incurred any impairment? Have we incurred any impairment? Yes. Where will we show this impairment? We will show this in retained earnings, right? It's an expense for us. So we have to show where? Where should we show it? Where should we show it? We have to show it in the group retained earnings. Got it? We have to show it in group retained earnings. See, in the case of if impairment arises, the NCI share will be shown in working 4 and the parent's share will be shown in working 5. Is it clear? Is it clear? Everyone, is it clear? So what is goodwill here? What is goodwill here? What is goodwill impairment here? What is the total impairment of goodwill? What is the total impairment of goodwill? 258, right? Into how much percentage? 0.8. Okay, fine. So my next question is there anything else that we have to consider here? Is there anything else? Exactly. Since there is a finance cost incurred throughout the year, we have to consider what? We have to consider what? We have to consider finance cost because it is an expense, right? It is an expense for it is an expense for the parent company. So where will we show it? Where will we show it? We will show it under group retained earnings as what? Finance cost. Finance cost. How much is the finance cost here? What is the deferred consideration? What is the deferred consideration? It is 375, right? It is 375. It is 375. It is 375, right? So when are we giving this? It's after 2 years, right? See, the reporting date is after 2 years. See, after acquisition, when are we preparing? When are we preparing this consolidated statement? See, it's mentioning there. See, Peppermint acquired the share capital 2 years ago. So how much? So this is the opening value as of one. See, I'll tell you. See, what is the opening value of deferred liability? Opening value of deferred liability. Tell me. Opening value of deferred liability. Tell me, guys. It is 375, right? See, this is at which date? See, when are we giving this deferred consideration? When was the contract agreed? You can read the first sentence. Peppermint acquired 80% of the share capital of Peppermint 2 years ago, right? See, 2 years ago. Can you guys see this? When we agreed this, when was the contract agreement made? When was the contract agreement made? It was made 2 years ago, right? It was made. It was made when? When was it made, guys? When was it made? It was made 2 years ago. So what will be the opening value of deferred liability? It will be 375. The opening value of deferred liability will be 375. But what will be the date? See, what is today's date? What is today's date? What is today's date? As per the question, what is today's date? I want everyone to respond. What is today's date as per the question? Tell me, what is today's date as per the question? 20x for what? 20x for 31st December 20x for, right? So 2 years ago means what? 1st Jan 20x3. Is it clear? Is it clear, guys? This is the opening value of deferred liability on 1st Jan 20x3. As we move on further, what will happen? What will happen as we move on further? What will happen? Finance cost. So what will be the finance cost incurred in 20x3? What will be the finance cost that will be incurred in 20x3? Tell me, what is the discounting factor here? What is the interest rate? What is the interest rate as per the question? Tell me. It's 10%, right? Yeah. So what will be the finance cost? It will be 37.5. So the finance cost in respective of 20x3 will be how much? Into zero point 0.1. What is it? 37.5. Now, on 31st December 20x3, what will be the closing value of deferred liability? Closing value of deferred liability. Tell me. Deferred liability. What is the closing value of deferred liability? Tell me. It will be the sum, right? 412.5. Okay. Now coming on to the current year, what will be the opening value of liability on 21st Jan 20x4? What will be the liability? Opening value of deferred liability, sorry, deferred liability. Tell me. It will be 412.5. What will be there in additional? As we move on further, we'll have finance cost. What is the finance cost? This into zero point 0.1. What will it be? 41.25. So what will be the closing value of deferred liability? Closing value of deferred liability. What will be the closing value? It will be the sum of 453. My question is, have we recognized this share consideration in the books? Have we recognized this deferred consideration in the books? As per the question. No. So if we are not recognizing this deferred consideration, will we be recognizing finance cost? Will we be recognizing finance cost without recognizing deferred consideration? No, right? We won't be recognizing finance cost. So we have to do what? We have to recognize this finance cost, right? We have to recognize this finance cost now. So what is the finance cost that we have to recognize in the books? Tell me. How much is it? It is 78.5, right? What is the total finance cost that we have to mention? 78.75. So where will we mention this? Where will we show this finance cost in the workings? Where will we show? Group retained earnings. So what is it? This is equal to 41.25 in the current year and that of 37.5 in the previous year. Is it clear? Okay, fine. So are we done? Are we done with group retained earnings? We have adjusted everything, right? So we have to take the sum. How much is the closing amount? What is the closing amount? Group retained earnings. What is it? 1150.85. Is it clear, guys? Are you guys having any doubts regarding this? Are you guys having any doubts regarding this? It's clear, right? Okay. Fine, 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 fine. So are we done with the workings? Are we done with the workings? Okay. Now, as you guys have told me before, tell me what will be the journal entry? What will be the journal entry that have to be made? Just a minute. Just a minute, hold on. Okay, tell me. What I want you guys to tell me what will be the journal entry? What will be the journal entry in respective of this finance cost? Just think and tell me what is this finance cost for us? What is this finance cost for us? What is it? Expense. So will we debit or credit expense? Exactly. Debit finance cost. Credit what? Credit deferred liability. Deferred liability. So how much is the finance cost here? How much is the finance cost? How much is the finance cost? How much is the finance cost? 78.75. Deferred liability will also increase by 78.75. Are you guys clear with this journal entry? Are you guys clear with this journal entry? Okay, fine. So are we done with the workings now? Are we done with the workings now? So shall we make the consolidated SOFP? Shall we start making it? Are you guys ready? Are you guys ready? Just a minute. Okay. So let's start. So let's start from which value? What is the first thing that we'll take into consideration? What is the first thing? That is non-current assets, right? Non-current assets. Non-current assets. What is the first thing here? What is the first thing that we have to consider here? What is the first thing that we have to consider here? Tell me. Property, plant, and equipment, right? Property, plant, and equipment. Okay, fine. Just a minute. What will be the value of property, plant, and equipment? Tell me. What will be the value of property, plant, and equipment? See, we have peppermints pepper plant of 5,500. Now, what else do we have? 1,500. But is this the value? Is this the value? Tell me. Is this the value? No, we have to adjust what? We have to adjust depreciation, right? The depreciation that we have charged. How much depreciation have we charged here? How much depreciation did we charge? See, how much depreciation? 80. So minus what? Minus 80. You guys get it? Oh, sorry. Wait. No. You have to add that 200 also. Wait. Plus what? Fair value adjustment. 200. Minus what? 80. You guys get it? Is it clear? Is it clear? Okay. What next? What next? What next? What do we have in non-current assets? We have investment in spearmint. Will we take it? No, because it's an intra transaction. So what else do we have? We have goodwill. We have goodwill. What is the value of goodwill that we have got? What is the value of goodwill that we have got? See, what is the goodwill? Is it 1,040 or is it 782? 782, right? It is 782. 782. What else do we have? What else do we have? Is there anything else? So read the question. Is there anything else? Brand. What is a brand? What is the value of the brand? What is the value of the brand? See, the brand's value has not been recognized. So how we should recognize it fully? What is the value of brand? 250. Minus what? Minus what? The brand value's opening was 250 and the depreciation was 50. So how much is it? 200. Is there anything else? Is there anything else? See, current assets are there, right? Current assets. Current assets. What all are there in current assets? Tell me. What do we have in current assets? We have inventory. We have inventory. We have receivables. And what else do we have? We have cash. So how much is the inventory? 550 plus 100. Is there any adjustments that needs to be done in case of inventory? No, right? It's not being mentioned in the question, right? So is there any adjustment regarding to inventory? No. What about receivables? Is there any adjustment for receivables? Is there any adjustment to be made for receivables? No. What about cash? What about cash? No. 200 plus 50. So tell me, what is the total assets here? Total assets that we have. The total assets that we have will be the sum of all these, right? It will be 9602. Is this clear? It will be 9602. Okay. So what do we have next? We have equity. We have equity. What do we have in equity? Tell me. What all things will we take in equity in the case of equity? We'll be taking what? Share capital. We'll be taking share capital. Just a minute. We'll be taking what? We'll be taking share capital. Now, now, tell me what is the value of share capital here? What is the value of share capital here? What will be the value of share capital? What will be the value of share capital? Will it be 2000? Will it be 2000? Tell me. Will it be 2000? Will it be 2000? No. Why? Why? My question is why? Why is it not? Why is it not 2000? But why is it 2200? Why? Tell me why. Tell me. Why is it 2200? Exactly. We issued how much shares? We issued 200 shares during this course, right? This period. We we issued. Have this been shown in the books? Have they considered this in the books? No. So we have to recognize it, right? So what is the share capital? What is the share capital? 2000. That is equal to 2000 plus 200. That is newly issued shares. So we have issued 200 shares. Okay, we have issued 200 shares. See, was it issued at nominal value? Was the shares issued at nominal value? Was the share issued at nominal value? Then at what and at which value was it issued? Market value. So market value. So we have only shown the share cap nominal value here, right? In share capital, we'll only be showing what? Nominal value. But what is remaining? What is remaining? Nominal value is 1. Market value is how much? How much was the market value? Let's read the question. How much was the market value? How much is the market value? 1.8. In that one, we have shown where? In share capital, right? How will we show share capital? 200 into nominal value, that is 1. But what else is remaining there? Have we shown this 0.8? No, right? So we have to show what? Share premium, right? We have to show share premium. What is the share premium here? How much shares have we issued extra? How much share have we issued? 200 into how much is remaining? What value should be shown here? Per share, 0.8. How much is it? 160. Got it. Is it clear, guys? Okay. So we are done with share capital and share premium. What else is remaining? What else is remaining? What else is remaining? Group retained earnings is remaining. What is group retained earnings? What is the group retained earnings? What is the group retained earnings? How much have we found it out? How much did we get? We got 1.5. Okay, wait. Is there anything else in equity? Is there anything else in equity? Is there anything else in equity? Exactly. There is NCI, right? There is NCI left. So what is the value of NCI that we have got? What is the value of NCI that we have got? It is 337.4. Okay. Anything else? Anything else? Anything else? Tell me, guys. Anything else? Is there anything else that we have to consider? Equity part is over, right? We are done with equity. Now what we have? We have liabilities, right? We have what? We have liabilities. What is the liability? What is the liability here? We have non-current liabilities of how much? Non-current liabilities. How much is the non-current liability? How much is the non-current liabilities? It is 3,000 plus 3,000 plus 400, right? Are you guys there? It's 3,000 plus 400. So what else is there? Current liabilities. Current liability. Current liability. How much is the current liability? How much is the current liability? What are you guys? Are you guys? Is it audible? What is the current liability here? It is equal to 1250 plus 650. Is there anything else? Is there anything else in liability? Exactly. See, they have not considered what deferred consideration. So we have to consider deferred consideration, right? How much is the how much will be the value of deferred consideration? How much will be the value of deferred consideration? See, we have found out the closing amount. See, you can see, right? What is the closing value of deferred liability here? What is the closing value of deferred liability? Tell me. What is the closing value of deferred liability? Tell me, guys. 453.75. How much is it? Is equal to 453.75. Is there anything else to be considered now? Is everything done? Is everything done? Yeah. So total equity and liability. So let's take the sum of this. Are these both equal? Are these both equal? So is our FS statement correct? See, let me ask you guys one thing. Are you guys now confident with SOFP? I mean, consolidated statements. Are you guys confident now? Are you guys confident? Is the concept 100% clear? Is the concept 100% clear? Is the concept? See, if you are good, if you are confident that you will be scoring full marks in consolidation, put a thumbs up in the chat box. If you are confident with consolidation, put a thumbs up in the chat box. If you don't have any doubts regarding this, regarding the consolidated statement of financial position, tell me. Do you guys have any doubt regarding consolidation of SOFP? PURP, unrealized profit. Is it? Okay. I'll explain it tomorrow then. Okay, PURP. It's not a big deal. It's very easy. We'll have to just subtract it from this one. That's it. I'll explain it tomorrow. Okay. Our time is up. Are you guys confident? Are you guys confident with this? Okay, okay. See, PURP I will take it tomorrow. Okay, don't worry. It's a small thing. It's not much complicated. It's a small thing. See, we'll have to eliminate the inter-transactions profit. That's it. Okay, nothing else. Okay. So shall we wind it up then? Do you have any concerns? Tomorrow will be our last session. So was this booster session beneficial for you guys? Tell me. Was this booster session beneficial for you guys? Want everyone's response. Okay, 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 fine, fine, fine. Yeah, okay, okay, okay. See you. See who all are there in class. You guys are attempting your exam in June, right? Everyone. Is there anyone who is not attending in June? Is there anyone who is not attending in June? Okay, okay, fine, fine, fine. So all the best, guys. We'll meet tomorrow. Okay. I'll discuss this PURP tomorrow. There's nothing in it. Okay. So yeah, we'll wind it up then. Any more concerns do you have? See, you were telling me you were not confident with I mean consolidation. I hope you are okay with consolidation now. Is there anything else that I have to take? Okay, okay, okay. Let me see if I can take a single entity tomorrow. Okay. Don't be worried. We'll look into it. Okay. Okay. What else? Any more concerns? Any more concerns? Shall we wind it up then? Shall we wind it up? Okay, okay, okay. Fine, fine, fine. Okay, guys. Thank you.